Good morning. Thank you guys so much for tuning into today's live stream. It is July 25th, 2025, and to begin today's live stream, I do want to take a look at the economic calendar here. We don't really have much volatile news coming into today. Nothing too exciting. And just a quick look into next week's economic calendar. One thing that I do want to mention here is that next week on Wednesday we have FOMC, where they are going to release they're gonna decide if they were going to want to cut interest rates or hike interest rates. So that's going to have a major, that's going to be pretty major here in the direction of our economy. Also, we have core PCE price index, which is a inflation indicator. So we'll see where that is. And we also have NFPA here as well on Friday. Next week, we have non-farm employment change. And so we have, next week is a lot more, event driven compared to this week. Today, like I said before, we don't really have much. So not really expecting much volatility coming into today. And to dive right into the technical analysis here. So the first thing I do want to start off with is taking a look here on the daily time frame. So this is where that purple line is pointing towards. That is the daily candle of yesterday. And with the way that we closed here on this daily candle, it's not an up close candle, but it's like a doji candle that supports the upside, right? I wouldn't necessarily force anything based off of this closure here, but we did end up taking out previous day high coming into, so this is where previous day high is. So we ended up taking out previous day high coming into the Asian session, and us taking out that previous day high means that I don't necessarily have a daily bias anymore, or not even daily bias, but I don't have a daily objective at this point in time. So I'm not really too concerned of what the daily time frame is going to do. My best approach coming into the morning session today is to utilize how we close here on this 4-hour candle and this 8-hour candle. Depending on how those two candles close will give me a morning objective, right? I can apply the same concepts as I did on the daily time frame onto the 4-hour time frame / 8-hour time frame. So the question is, did this 4-hour candle close bearish or did it close bullish, right? And with the way that we closed, can you anticipate that we should take out the 4-hour high, or can you anticipate that we should take out the 4-hour low? Those are just some questions that you may want to ask yourself, right? To understand what the bias is on those two time frames. And so that's kind of what my approach is coming into the morning session today. Not really going to force anything just yet, right? We have about 24 minutes left until we close here on the 4-hour candle and the 8-hour candle. And before then, I'm not, yeah, I'm pretty much, I'm not gonna do anything. I'm not gonna try to force an idea. I think it's best for me just to, you know, sit on the sidelines and just spectate just for a little while until prices makes its move. And yeah, so that's kind of what my plan is coming into the morning session today and what it is. Being nimble, being able to pivot from different time frames is going to allow me to be versatile, right? I have to understand and really enforce the idea that prices is fractal and that I should be able to utilize every single time frame to my advantage, right? And yeah, so that's kind of what my approach is. I'm just gonna wait until the 4-hour candle closes and the 8-hour candle closes for a bias. And let's see here. So today is Friday, and that means that the weekly candle is going to close here sometime. It's gonna close pretty soon, right? And you want to really pay close attention to how the weekly candle is going to close, right? That gives you a lot of information. Whether or not we should, you know, take out the weekly low or the weekly high is dependent on the way that we close on the weekly time frame. And so that's something that you do want to, you know, keep in mind of. Just pay close attention to that. Let's take a look and see here on ES if we have any SMT divergence. No SMT divergence as of yet to the downside. Interesting. Very, very interesting. Has been a pretty interesting week so far, right? You know, we continued higher here coming into Monday, and then we sold off onto Tuesday. We continued higher here again on Wednesday, and then we basically consolidated on Thursday. Let's see what happens here coming into Friday. Will we, you know, reverse and continue lower, or will we expand higher, or will we just consolidate, right? I think it's less probable that we are going to expand due to the fact that it is a Friday and it's not efficient for prices to just continuously expand, right? Notice how in a candle's closure, there's always going to be an open, you know, a low, expansion, but we don't expand continuously. There's always going to be that phase in the later parts of the candle where we retrace back into the range. We retrace back into the range, and then we kind of like consolidate until we get the closure. That's kind of what my ideal is for today's session. or just today in general, because it's a Friday. Just anticipating pretty much a consolidation today, perhaps, right? Waiting and see what happens here, but that's kind of what my ideal is, or thought process is for today. I think now I can go into the pros and cons. And yeah, so the first thing that I do want to mention is with every single setup that I take, there's going to be 3 components that I look for. The first is a higher time frame objective. It is essentially the bigger reason for why I want to see prices continue in a specific direction. Are we expanding? Are we continuing to expand towards a low or a high? Are we retracing back into discount or premium? Right? Imagine the higher time frame objective as like a really big magnet pulling prices towards it. And your model is how you align yourself with the higher time frame order flow, right? If the higher time frame order flow is bearish, then your model should be supporting the idea of lower prices as well. It should be based off of a down close candle that suggests that the next candle should take out the previous candle's low, and view it also as if it is a magnet, but a smaller magnet that pulls prices in the same direction, right? So that's kind of what a higher time frame objective in a model is. The last thing that I look for is a entry pattern. And my entry pattern of choice is always going to be a fair value gap, right? There are some instances where there is a fair value gap, but the fair value gap should be treated as a breakaway gap. And if a gap is a breakaway gap, then I don't want to see prices rebalance it, and I just want to see a continuation without retracing. And that's just something that you do want to consider whenever you are entering off of a fair value gap, right? The reason why I like fair value gaps are because it's really easy to see, and the way that I interpret a fair value gap essentially is fair value gaps show where there is strength in the markets, right? Think of it as like, I mean, its name is literally like for a bullish fair value gap, it's buy side imbalance, sell side inefficiency. It's an inefficiency in prices, and it's created whenever there's displacement, like in the markets. And yeah, so those are the 3 things, the 3 components that I look for whenever I do take a setup. And because I require these 3 things constantly, it keeps me consistent, right? It keeps me consistent and structured in the setups that I take. The second thing that I do want to go over today is a fair value gap, right? Making sure that your fair value gap could be treated as an entry pattern is and was game changing to me, right? Sometimes I would try to enter off of a fair value gap that should be treated as a breakaway gap, but it didn't really click to me until I really thought about it, and I was like, okay, the name literally means breakaway gap, and if it's a breakaway gap, then prices should have no reason to be rebalancing into it. If prices does rebalance into a gap that should be treated as a breakaway gap, then it's not as urgent to be continuing in that specific direction, right? And you want to be a part of that urgency. You want to be a part of that momentum. Third is to utilize every single time frame to your advantage, right? You have to understand that time is fractal, and this is a key aspect in the way that I view prices. So notice how, like today, I'm able to utilize, the daily time frame. I'm able to utilize the 4-hour time frame, the 8-hour time frame. All of these time frames have the same concepts. They all have the same open, high, low, close. And yeah, so like if you can apply that same concept of, hey, should this candle or should this next candle take out the previous candle's low or high, that is going to give you a lot of insight on how prices should behave almost. And so, yeah, utilize the fact that time is fractal and learn how to pivot. Fourth but not least, or I guess last but not least, it's to pay close attention to SMT. SMT is basically a divergence in two or more correlated assets, right? The reason why I say correlated assets is that you don't want to be comparing two assets that don't really correlate. It's not as efficient, right? And it doesn't really benefit you in any way. And so the assets of choice here is NQ and ES. And what you want to pay attention to is, did we take out, specific lows here on ES as NQ? Are we making new all-time highs here on NQ as we are here on ES? Those are just some of the questions that you want to ask yourself, right? SMT indicates where there has been manipulation, and the key thing that you want to take away from SMT is that if there is SMT, then you have to respect the idea that we could reverse. If there isn't SMT, then it is more probable for prices to be continuing in a specific direction, right? Those are the two scenarios that could play out utilizing SMT. And the last thing here for the pros and cons is the improvements, which is basically a summary of the pros and cons. First, and it's always going to be, number one, is to take consistent setups. Like I stated before, there are 3 things that I look for before I even press the button: higher time frame objective, a model, and an entry pattern. Second is to watch closely between the relationship of NQ and ES. SMT is going to show you where there has been manipulation. Third, you want to be proactive, be present for any opportunities, and if there is an opportunity, then you want to be there to utilize it, right? Maximize it. All right, and fourth, pay close attention to your to your fair value gap, to your entry pattern. You want to ask yourself, should this fair value gap be treated as a entry pattern, or should it be treated as a breakaway gap? Another question is, during a trade, you want to ask yourself is, are we respecting the consequent encroachment of a fair value gap? Consequent encroachment is essentially the midpoint of a fair value gap, right? It's the halfway point of a gap. So like there's a fair value gap right here. Consequent encroachment is that darker red line in the middle of that box. Alright, and the last thing but not least is to track the 10K journey, or track my 10K journey. I'm going to journal every single execution that I take, and I'm going to do my best to record live on how I am interacting with prices and how I am managing myself during an execution. And that's going to be all for the pros and cons here for this week. And for today, I guess. Let's take a look at what's going on here in prices. It seems as if we are continuing, or I guess, yeah, we are continuing to expand here. Yeah. Interesting. We are seeing like this push up here. We aren't really seeing that here on ES, but this is something that this is interesting. Alright, 5 minutes left. I'm gonna try to get into a really quick chess game to kind of burn off this time. But hopefully going over those pros and cons helped you guys a lot with understanding the way that I view prices, right? might as well just trade there. Probably. Try to get this bishop out like this. Attack here, give him the check. He might castle here, to be honest. Yep. Understandable. Up a pawn. He's looking here right now, which isn't. I can go here. Just slide back. Quick little slide back. Now we're even. I have this open file here, so I can like probably slide my rook here. Go for this. Might want to bring in my he might go like here, slide here. There's a 10 o'clock open. Let's take a look. Doesn't look too I think I just got my rook trapped. I think this is my only option, right? And he can just slide here. I think I can't really go anywhere. Oh, here. Oh my gosh, I think I just created an opening. now I'm down a this here. Okay, I think I should be able to win this endgame. Nice. Nice. Alright, so here we did have like a last second retracement, deeper retracement back into the 4-hour range. Same thing here on this 8-hour time frame. We had this doji candle, but it's nothing too like crazy, right? What I mean crazy is that it's not really, it doesn't really confirm the idea of like, hey, I'm gonna go higher. It's not as strong, right? And so, I mean, we did end up taking out the 4-hour high, but to be honest, I don't think I wouldn't have really like try to be a part of anything here. I'm not gonna try to force anything. And I think that's a reasonable response. I think, yeah. So for the rest of today, I'm gonna, yeah. I think for the rest of today, my best approach is to utilize, you know, the 6-hour time frame and utilize all of these other time frames, like like anything above the 15 minutes, above the 15-minute, I'll utilize. Just to be nimble, just to be able to pivot from different time frames. And yeah, so that's gonna be all for today's live stream. Keep in mind that today is the last day of the trading week, so I'm really not anticipating much expansion, to be honest. And to utilize different time frames, learn how to be able to pivot. Alright, thank you guys so much for tuning in.